kick off whenever you feel ready.
Great. So welcome everybody to this live stream between MetaMask and Ondo Finance, where we are going to talk about our latest release, which is real world assets, tokenized real world assets in MetaMask and powered by Ondo Finance. So in the next half an hour, we have Armand from Ondo here, who is the head of ecosystem, as our counterpart to talk a little bit about everything around the integration, about what makes real world assets and tokenized equities in particular so much better than their counterparts that you would see in a neobank. And of course, how you can trade these in your favorite wallet, that is MetaMask. So really looking forward to that chat, and welcome, Armand.
Thank you so much for having me, Alex. We off the incredible momentum of our announcement on Tuesday, where we were able to share this at the Ondo Summit, annual Ondo Summit that just happened here in New York City. So the energy in that room is just incredible. We had 400 of, the leaders in on-chain asset management, et cetera, coming together to figure out what is next for the future of RWAs on chain, and having our as part of that is exciting because this is the most wide custodial wallet, right? MetaMask now has access to global markets, the most high quality assets that really exist in the world. So pump for this and pump for what's next.
Yeah. And just to set the stage there a little bit, for people listening in, we're talking about New York City, Jazz at Lincoln Center, a massive window overlooking, downtown Manhattan. And then at 12 o'clock at noon, our CEO, Joe Lubin, comes on stage with your president, Ian, and basically speaking on, I think, 80,000 or so people being tuned in live, releasing the news. So it was just a fantastic way to launch this feature, and we're just really stoked overall for the reasons that you've mentioned. MetaMask is the OG self-custodial wallet, 30 million plus monthly active users. But now for the first time, we're giving all these users access to spot equity, ETF, commodity trading, and thus cover the entire risk curve, which is just fantastic, especially right now as the market is going down, giving people a chance to move some of that crypto into other asset classes without having to leave the confines of Web3. So let's get straight into it. I think we wanted to keep it light in the beginning to give users and listeners in general a moment to dial in. We hope everybody's here now. Let's talk a little bit about, before we get started, to warm up the problem that we're solving for global investors, right? So the news, just to summarize it up again, is in MetaMask and outside of the US, people now have the chance to trade over 200 different spot assets, such as individual stocks, your Google, Tesla, Nvidia, all the way down to Coca-Cola, Starbucks, you name it. But also ETFs, things like the MSCI World, the NASDAQ, even the Russell. And then I think my personal favorite is things like commodities, which also come as an ETF, but you can trade into silver, into gold, I think even oil, palladium, a couple of other ones. And then your most recent one, which is private credit. So even yield-bearing assets are now available to this. That feels amazing, just as an enabler for our users, especially in regions which traditionally didn't have so much access to U.S. equities or assets in general, who now sort of have everything available in their favorite non-custodial wallet, 16 hours a day, without sort of U.S. brokers or intermediaries. and and there's a lot of exciting things that we can do sort of with these assets that Armand, I kind of want to like talk to you about. So when you think about people using their crypto and diversifying some of their portfolio within MetaMask, what makes these assets so much better than sort of these traditional brokers that people are used to?
Yeah, I mean, just to get started and frame the opportunity here, there's been a long history of, real world assets coming on chain in one way or another. I think if we look at ETH mainnet, where like, the genesis of where all this started, it's incredible that we have, as a crypto ecosystem, almost $300 billion of stable coins on chain. And really, stable coins have paved the way for users to say, wow, this is incredible. I could hedge my local currency into a US dollar or a euro or some other currency that perhaps I have like more faith in, that is not debasing as quickly as my local currency. But then over time, these same users are also realizing that inflation exists, and these currencies are still eroding in value. I think that's why for the past, couple of weeks or months, we've seen commodities trading the way they have, with gold and silver really leading the way.
Right.
For a moment in time, and perhaps to this day, silver is one of the most held assets for the Ondo global markets, tokenized stocks and ETFs, our silver ETF, with iShares. So it's incredible that that shift has happened. But when you look at on-chain tokenized stocks done the right way, wrapped the way that we have done them, it only represents $1 billion in value. So less than a third of a percent of stablecoin TVL that's out there is in these tokenized stocks and ETFs. And yes, like Ondo is very much so the leader here. Ondo Global Markets has changed the way that people could access these assets. They could buy them in size. They have access to more assets than any other issuer has access to. And we're only getting started. We only have, hundreds of these assets. Wait till we get to thousands, or, perhaps reach parity with the total US global stocks and ETFs market of around like 6,000 or so. But I'd say the reason that people are all of a sudden opening their eyes to this is because there's been a softening of crypto prices. And there's an entire sort of group, a population in the world that has come in on a like mobile first rails. They saw fintech, it maybe didn't actually suit their needs or didn't reach them because of where they're located. And they said, wow, crypto rails are my global banking system. And we're very much so in the earliest of innings of interfaces like MetaMask looking more like the future access point to global banking versus interfaces like a very traditional and slow brokerage. And I think the reason for that is people have become very accustomed to personalization, choice, and complete ownership, right? And that all comes with self-custody of crypto rails. So I can now hold my stocks that have, the same investor protections for the most part that I'm getting at most brokerages, except all of a sudden I could onboard to these assets without having to, prove myself to one of these brokerage platforms. I could hold them, I could utilize them on chain. They are ERC20 assets that are interoperable with what all the DeFi money Legos that have already been built. And now you're seeing this competition where instead of being subject to what my brokerage has to offer me, unless of course I want to go through a lengthy and arduous process of transferring my assets to a net new brokerage, but instead of that system where I'm subject to what my brokerage has, I all of a sudden have competition that's on chain competing for my, let's say, deposits, for
Yeah.
my assets to be utilized in their protocols. And that is a very significant shift where the consumer all of a sudden has the power dynamic instead of the platform having, or let's say like the TradFi app layer having the power over the user. And that's what I'm most excited for here.
Yeah, and it's so when I worked my way into like RWAs at first and basically did all that research, that piece was what really blew my mind is, once you look from like an on-chain perspective back onto what traditional brokers do with equities, you start to notice just kind of like how old school that system is.
Yeah.
Right? You use fiat like cash, you buy some Apple shares. So like if you want to get rid of those Apple shares, you need to convert them back into fiat and then use that fiat and put them back into Google and so on. With crypto or like sort of equities on crypto rails, you can swap one against the other. You don't have to kind of cash out and incur these fees and potentially taxable events every time.
Yeah,
and then there's
I'm sorry, Alex, but because it's self-custody, right? I could choose which of my assets in my MetaMask actually become tokenized stocks and ETFs, and instead of having to, have cash locked up in some other, in a brokerage and not having that cash usable elsewhere, I could still have all that here. I'm getting a little feedback in the back end. I'm not sure what's going on, if that's my mic or not.
Yeah. So let's start to like look into some of those things a little bit more closely. So I would love to share my screen and kind of go through use our website metamask.io/RWA for a little bit more context. So when you go into your MetaMask app, you will see these Ondo assets, spot RWAs, being available right now in mobile only. Extension will soon follow, but to date, only on mobile. The US isn't covered. And there are some other geo restrictions here as well for the moment because of the local legislation there. For example, in the EU, we're having some geo restrictions. In the UK and Brazil, those are the main ones. So want to make sure that people understand that right now your IP address, where that points to, matters in whether you are seeing these assets pop up or not. The place that you want to go to trade these is just our swap function. So you move into swaps, and then you would search for the asset that you're interested in. So on this website, we have a complete list of all 202 or 203 assets that you can now use to trade. Now, the source token should always be USDC, ideally. That's the smoothest trading route. So in this case, USDC Alphabet, for example. And you are able to find more information on each token when you click on the page. So we've kind of spun up a page here that gives you sort of all the background that you need to calculate and sort of like make your decisions. So we want to just encourage everybody to just visit this page first and then look for the assets there. You can see the list is humongous. Pretty much anything that you have in a neobank also pops up here, from your individual stocks to commodities, the equity ETFs, bonds, and then some special ones abbreviated ADR. Tell me again what ADR stands for, Armand.
Deposit receipts. So these are going to be foreign companies that are traded on U.S. markets. So we see like TSMC, a very big part of like the chip trade, and other companies that are foreign based do trade on U.S. markets as well. So it's exciting that we could offer many of the jurisdictions that are directly eligible for assets, companies that from their home turf. But I think that I don't want to go too far away from. I think when users swap these assets, they're going to experience a swap that is quite different from what they're accustomed to. Because the innovation of what we were able to do at Ondo is bring all of the TradFi liquidity the very first time. I think what we've seen from other tokenized stocks and ETFs is that they're trying to recreate liquidity on-chain to make it as on-chain native as possible. But there's an inherent issue to that you would have to assume that know how much liquidity there should be to service your demand. So let's say you take what seemingly is a large number of $1 million, and you say, I'm going to put $1 million of Apple stock and pair it with $1 million of a stable coin and put it in a traditional DEX pool. Well, the issue with that is that stock might be very popular. There's millions of people who can access these assets. So all of a sudden, if everybody's swapping a dollar or two of this stock, like smaller orders, that pool could be very askew, and the actual spot price of that asset would be so far away from what it's actually trading at on TradFi markets. So as bullish as I am that TradFi is moving on chain, we are not there yet, right? And until we're there, we're going to have to find innovative ways to access that deep liquidity by utilizing what we're calling like an RFQ model and leveraging the infrastructure of CowSwap under the hood here. We're able to offer the TradFi prices on chain. And that's coming straight into the MetaMask swap function. So a user can place their trades without worrying, am I getting the same price that I would get from an underlying brokerage? And that it is the case. Of course, there might be like, a bit or two of slippage and some like small fees for trading these assets, but it's no different than what you would have for on-chain native assets, while still benefiting from that TradFi, that very deep TradFi liquidity. That's why when you actually see who's trading these assets, whether you're going on some portfolio explorer or just like sleuthing on-chain data, you will regularly see like $1 million order sizes coming from users that are trading in size exclusively on Ondo tokenized stocks and ETFs, because we could support that size with no problem, as long as you're trading Sunday at 8 p.m. to Friday at 8 p.m., which is when markets are open, here in the United States.
Yeah, and so I think the topic that you just mentioned, the liquidity topic, that's one that comes up very often in the context of real world assets, and like that certainly in the beginning was hard for me to understand. And one of the main sort of advantages of Ondo in particular that you also communicate publicly is like you have deep liquidity. In fact, you're tapping into the liquidity of these basically TradFi markets of Wall Street, rather than being limited to sort of the artificial liquidity that some other platforms have when they create these new trading pairs. So like, talk to me about how you are able to tap into that like TradFi liquidity, how that works in simple terms.
Yeah, definitely. It's an RFQ process that happens in stages, but essentially we have APIs that are pinging underlying brokerages, and those APIs are taking the current price, so we don't have to rely on some external infrastructure. This is something that is starts in-house. Then we utilize systems, RFQs that already exist on chain to have a matching of sorts, where that price is now represented on chain at a moment when a primary purchaser makes this purchase, and then it ultimately ends up in the user's hands. So it's, on the surface, it's quite simple. It is minting and redeeming as an order is placed, but the actual orchestration of such and the tech that goes behind it is quite complex, and it's a little bit, it's a bit different to how swaps currently occur, in automated market makers and other, standard DEX pools, if you may.
Got it. Fantastic. I would love to also go one more time into the actual trading experience that users will see in MetaMask, and sort of like how that looks in practice. So I'll quickly switch my screen here to a presentation that we have prepared for that reason. So when you are in the mobile app right now, the main blockchain and the only blockchain that's supported is Ethereum mainnet. But you would be able to essentially search for any of these assets like you would with a regular token. You then select the token, for example, Apple, that you're interested in. You will notice that the Ondo assets always have this little appendix ON at the end. So that's what you can tell it's an Ondo asset. Sometimes you do have other assets come up, since MetaMask is an open ecosystem. It's not sort of blocking any assets, but make sure to look for the on at the end to find your way to the Ondo assets. You would then see some information on these individual token pages, and you are then able to use your USDC to swap into this, in this case, Apple, and you would then have it basically in your token balance like you see here.
Yeah, the swap experience is seamless. I mean, it's incredible to see it go live. I am a U.S. person, so I am not eligible, but I hope that will be the case soon enough. Regardless, it's incredible that we think about. I was talking to someone at the summit actually, and they were telling me that every year there's about 10 to 12 million people who are escaping what's classified as extreme poverty and moving to a place where they have investable assets. This is a population that is primarily based on mobile, a population that is maybe considering US stable coins as a currency hedge. And now this same population, as they have internet access and mobile access, and eventually, all this access to on-chain rails, they will just as easily be able to hedge their currency in, one of the most phenomenal investment products that exists in the world today, a low-cost S&P 500 ETF. And the fact that they could purchase fractions of this token on a recurring basis just makes me, so bullish on the future of, global banking and what that means for people who no longer have to be, again, subject to local fintechs or subject to local investment opportunities. The entire world competes, and may the best assets win ultimately. And yes, if they want to get into the gold trade, they no longer have to custody that gold. If they don't want to, they could purchase, again, a low-cost ETF to do so, and they could express whatever their financial opinions are through a deeper and deeper set of assets that are going to be available to them on a 24/5 basis, and be self-custodial so they can have full control over that financial picture that they want to paint.
And out of interest, what assets in particular are you seeing right now having the most momentum? Is there a top 5 that you can share where users go in?
Yeah, absolutely. I think earlier we were talking a little bit about how the commodities trade came up and has been very popular recently. I think that the folks that are trading our tokenized stocks and ETFs are quite a bit different than the folks that are buying and holding these assets. So whereas a buy and hold investor might be purchasing some of the major ETFs, the S&P 500 index, the QQQ, which is like the NASDAQ, some bonds, like a 30-year treasury bond, some assets that are maybe a little bit more predictable. We also see a lot of activity from both groups in what we would consider the Mag 7 or FANG, the Teslas of the world, the Metas, the NVIDIAs, et cetera. These assets have become very popular, with Google actually leading the way quite recently, I think in part due to improvements on Gemini and definitely a way to capture that sort of AI trade momentum that's also happening. But then I'd say on the other side, the more risk on side, we're seeing general interest in stocks that are focused on the long tail of AI use cases, quantum computing, up and coming commodities that are increasingly important on the world stage, like rare earths. There's a momentum across the board. And there's also interesting, dynamics to look at whenever we get close to earnings seasons. Uh, this week in particular, I think we have like 5 of the stocks being earnings, and there tends to be a lot of trading around those time. And the thing about how we set these tokens up, they essentially are a total return tracker. So as a ETF has a dividend or has corporate action like a stock split, there's sort of token amount does not change, but instead what that token represents in terms of how many shares changes. And let me unpack an example. Not too long ago, Netflix had a stock split where 1 share of Netflix turned into 10 shares of Netflix. So let's say Netflix was trading at $100. I don't remember quite what it would be at, but let's just use $100 for example. In their brokerage would have 1 share at $100, and then after that stock split would have 10 shares at $10. The issue with recreating this on chain is that user was utilizing 1 token of Netflix collateral in, let's say, a lend borrow. This is where it gets a little shaky. That $100 of collateral would have became, as you go on MetaMask and you set your allowance by the quantity of token when you allow an action, you would only have allowance for 1 token. You have to keep 1 token at parity with $100 of value. So we have a shares multiplier right now of Netflix on back end, and as your investor represents 10 shares of Netflix, your token balance has not changed. Instead, the number of shares that are attributed to that token has changed, meaning, DeFi interoperable without the worry of liquidation risk due to some back end, ops that we're doing on our side. And I think that in and of itself is an innovation to making these assets a little bit more.
Absolutely. And what would you say in terms of security? So like a lot of people, they're used to a bank being in between trades and sort of guaranteeing security. Now you basically do it self-custody like you would with your other tokens. But talk to me a little bit about your perspective, and you can use other partners as well as a reference point here, like how safe this is for the retail user to trade into and keep in their portfolio.
Yeah, I mean, ultimately it is still self-custodial. So whatever best practices, hopefully all the viewers here are already following security of their self-custodial wallets, they should continue using these best practices, assets, and any other tokens that they're holding. Differentiating factor here, though, is unlike, a lot of tokens that exist on chain, there are a couple of investor protections that are worth mentioning. Number one, these assets are fully backed by their chain, TradFi, stock ETF equivalents. So the shares multiplier, for instance, 1 Netflix token is the equivalent of, let's say, 10 shares of Netflix. And should there be other corporate actions, that number will adjust to make sure that that user is whole. The second thing is, like other Ondo products, these assets are bankruptcy remote. If anything were to happen to Ondo, the company that I work for, or the company that holds these assets, the user would still have claim to the value of those underlying assets, and that is written in our documentation, and that's very important because when you're trading in RWAs, that should be de facto, but it's not common practice, and it's something that people will have to learn over time, that you need to understand, are these assets, are they backed? Do they have investor protections? And last but not least, we have daily attestations of these assets by a third party, let's say auditing company, that are posted to show that we do in fact hold these at a traditional finance trust. So those shares are being held there. They're not something that we have to handle. It's custodied by a professional custodian from the world of traditional banking.
Yeah, especially the bankruptcy remoteness bit. I think that's the really important part that I want to sort of make sure like comes across is, you know, if crypto declines more and we have FTX kind of moments, that still, and it would affect Ondo hypothetically, that still would mean, the shares are locked away, safe from creditors, and sort of you would always be able to redeem the value of the underlying asset against that and make sure you can pull your cash out. I think that's really, really important for MetaMask users, that you have as much safety around this as possible. And the self-custodial bit just comes on top, that you own your own assets in your own wallet, and there's no intermediary there, in
Yeah,
terms
and
of.
sorry, Alex. And a self-custodial bit is exactly it, right? You have control over these assets, and even though you could only, mint new assets or redeem these for TradFi prices on a 24-hour a day, 5-day a week basis, on the weekends, these are still ERC20s. So assuming that you are transferring them with an eligible user, then they transfer the same way. So you still have the ability to move these assets as you please. And that level of control is something that you really can only get in a self-custodial, framework.
Yeah, absolutely. So I want to kind of look into the future a little bit. We have these over 200 assets there. There's a lot of coverage, but like walk us through what happens in the next like 6 to 12 months that users can look forward to, in any way that you choose to.
Yeah, quite a bit. So at our summit, we had a few announcements. I'll cover some of that here as well. But over time, we're just figuring out a way for more users globally to get access to these assets. Access is the number one important thing, and figuring that out is going to take time. But we're making a lot of inroads. There were a few announcements that we just made earlier this week, and we'll continue hopefully to have a steady drumbeat of making sure that happens. But as that happens, there's other things that we can do as well. Asset selection is important. Right now, there's just over 200. We hope to greatly increase that over the course of this year, giving people the ability to not just purchase the blue chips, the majors, and some other ETFs, et cetera, but at a certain point to construct their own strategies. There's no reason why a user within the next year or two can't figure out a way to construct their own ETFs by taking a number of these individual stocks, putting them into some sort of vault infrastructure, rebalancing them based on market cap, and having something that is net new that they cannot actually purchase on US markets just yet, but could only exist on chain. And to me, that's the very beginning and a somewhat simplistic, but eye-opening use case where the on-chain equivalent is just paramount to what already exists in TradFi. If we want to go a step further, talking a little bit about our shares multiplier and what that enables, is depositing these assets on, let's say, a lend borrow protocol and actually being able to utilize them as collateral. So I could take something that I wholeheartedly believe in, like the S&P 500 over time, have a perhaps better loan to value ratio than a traditional brokerage may give me as an individual, not as a institutional user, and borrow against that instead of being forced to sell my assets should I need the cash for something else that's happening in my life, whether someone's buying a home or has a student loan to pay. It's nice to be able to still hold your asset in a way that you feel comfortable with instead of having to liquidate and then worry about building up your investable assets down the road again. So, use cases like that are very exciting, and then that emerges over time. Yeah.
Absolutely, and I got excited about this one because this DeFi use case of using assets as collateral and borrowing against it. That's of course the holy grail of everything around blockchain infused assets. So tell us when we can roughly expect that capability to like land. Is there like an ETA around this?
Yeah, quite soon. So I hope that, within the next, weeks timeline, we'll be able to take a number of these assets and actually use them as collateral there. And to me, this is a very different lend borrow use case, right? We've been accustomed to utilizing crypto native tokens for these lend borrow aspects, but we're all feeling it right now. Crypto assets, despite how much they've grown, they're still quite volatile. And it does mean that a user risks the chance of having a low health score or getting liquidated in their lend borrow position. Of course, stocks and ETFs could be volatile, but many of them also are on the other side of the risk curve where they're not nearly as volatile. And some of them that are more on like a fixed income basis are not quite volatile at all. They're only increasing over time by nature of how they were constructed, right? So I am excited to have collateral that maybe allows users to sleep better at night because they're not so worried about the rapid price fluctuations that they might face for crypto native assets. And really, these assets give users the opportunity to rotate out of some of their crypto native assets if they, are whatever they're still holding and might want to rotate out of at a time when there are these spikes of volatility. Instead of going back to stables and having those just sit there, you could still participate, in banking more broadly. So the last thing I'll say that came out of our summit is the announcement of our Ondo perps protocol, which will be going live in the coming months here. And the exciting moment about that is, for the first time ever, you'd be able to utilize a more on-chain native version of a RWA spot asset. Ultimately will be able to be used as collateral for the perpetual contract. And the joy of that is the hedging that allows you to do all in one place will mean that these assets are really treated like first-class citizens versus having the perps contracts live on chain and then all the hedging happening in a brokerage that might have like T+2 settlement timing. Which would add a lot of friction and ops overhead to whomever's trying to maintain those positions. So I think that, it's happening naturally. TradFi is moving on chain, but also there's new infrastructure that's enabling it to move on chain at a much quicker pace. And we're just seeing the beginning of that.
Yeah, I think that to me really brings it home. It's you can see that sort of these assets, real world assets on crypto rails, are just becoming a lot better. Like sort of the technology really enhances this. All of this is now available in MetaMask thanks to Ondo for the regions that for whom this is open. We're working very closely with the Ondo team to expand that region and are excited for everything that's coming down the road. We encourage all of our users to open their app and check it out, be curious, and discover these new assets as you go through your week. And wanted to say a big thanks for joining us today on this call, Armand. We're coming up on time here. I really appreciate that you stayed with us for the last 40 minutes. See you all in the next live stream.
Appreciate you. Appreciate the partnership. Thank you very much.